Ladies and gentlemen, good day and welcome to Rallis India Limited Q2 and H1FY26 earnings conference call. We have with us today Dr. Gyanendra Shukla, Managing Director and CEO, and Mr. Bhaskar Swaminathan, Chief Financial Officer. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Dr. Gyanendra Shukla. Thank you, and over to you, Mr. Shukla.
Good morning, and thank you everyone for joining us today for Rallis India Limited Q2 and H1 fiscal year 26 earnings call. As mentioned, I have alongside with me Mr. Bhaskar Swaminathan, our new CFO. Welcome, Bhaskar. Let me begin the discussion by delving into the industry landscape initially, post which I will discuss Rallis specific developments. The abnormal and uneven rainfall distribution in Q2 of 2025 has led to significant crop losses in three economic consuming states. The heavy rain caused floods, waterlogging, and submergence of large farmland areas, which severely affected crops like soybean, maize, cotton, and pulses. These conditions delayed harvesting and the application of crop protection product, limited pest infestation due to heavy rain washing away pests, and increased sales return of agrochemical products due to lower demand from farmers. Moving on to global signals for recovery in the agrochemical sector in 2025 show cautious optimism, with gradual demand improvement supported by stable pricing and strong export demand, particularly from markets like the US and Brazil. Industry margins are likely to remain subdued amid rising competition and US tariffs on Chinese agrochemical imports. Indian agricultural exports to key markets like the US and Brazil are growing at 5 to 6%, supported by destocking normalization. China continues to keep the market well supplied. Demand in the US has been stable. The US-China trade tensions, including tariffs up to 60%, are pushing US manufacturing repatriation and reducing Chinese export competitiveness. Moving to the Rallis specific developments, we had a muted Q2 performance on the back of incessant rainfall in the key agrochemical consuming states like Punjab, Maharashtra, UP, and Rajasthan. Our revenues stood at 861 crore versus rupees 921 crore of Q2 25. Overall, EBITDA for Q2 26 stood at rupees 150 crore, lower by 7% compared to Q2 of the previous years. A profit after tax at rupees 102 crore versus 98 crore of Q2 25, which is 120 basis points higher than the previous same quarter. Crop care segment degrew by 3% due to lower performance on domestic front due to excessive rains. Export revenue grew by 33%, whereas seed segment degrew by 29%. Moving into domestic B2C, our revenue degrew by 8% and volume degrowth of 3%. Liquidation of herbicides in cotton and soybean suffered, which led to returns and overall volume degrowth, with farmers missing on the spray due to heavy rains. Insecticide also registered degrowth. From overall perspective, herbicide category is still under indexed within our business, and we are consciously working on launching new products and improving the share progressively. New product launched during the quarter are D-Weed and Dorido. D-Weed is a herbicide and Dorido is a fungicide. Soil and plant health category faced subdued demand due to poor crop yield prospect, adverse weather conditions, and regulatory challenges. Our continuous actions around expanding targeted reach and penetration, leveraging digital initiatives showing good momentum. We continue to work on rationalizing the portfolio and sharpening focus across key markets. Our export business has displayed encouraging performance with a focus on maximizing volume, driving capacity utilization for our plants, and expanding customer base. US traffic impacted some technical and formulation business for US CSM Q2. As a result, CSM Q2 revenue is impacted due to customer phasing of dispatch plan for key products. Metribuzin and hexaconazole showed good momentum pandemically and are also on the good track, and with long-term demand remaining steady. We also have commercialized the planned capacity expansion with new efficient technologies. Exhibit has also shown improvement in H1 fiscal year 26 in comparison to the same period of last year, improving capacity utilization. Across technicals, we are steadily working on expanding the customer base and securing registrations with more global players to improve our share. Moving to seed business, seed revenue degrew by 29% in the quarter from 141 crore to 101 crore. Quarter two witnessed significant supply chain constraints for maize, particularly in Tamil Nadu and neighboring states in Q2. Our placement volume fell short of planned targets, mitigated through enhancement of placement of mustard. Widespread adoption of illegal HTBT varieties resulted in high returns of organized seed companies. We have increased product demonstration activities to maximize sales in Kharif 26. We are focused on accelerating the launch pipeline for proprietary research ID varieties with high yield potential. The near-term outlook for the business remains positive on the back of reservoir level and positive engagement with export customers. Our continuous efforts are directed towards long-term improvement, like customer centricity, sharpening the portfolio choices, launching new products, expanding strategic alliances and farmer reach, and leveraging digitalization across the operations. That concludes my opening remark. I will now hand over to Bhaskar, our CFO, for a detailed analysis of the financial situation. Over to you, Bhaskar.
Thank you, Dr. Gyanendra. Good morning, everyone, and thank you for joining us today for our Q2 and H1 FY26 earnings call. I will walk you through our financial performance for the quarter, post which we shall commence the Q&A session. Starting with the top line for the quarter, our revenue stood at rupees 861 crore as against rupees 926 crore for the same period last year, resulting in overall degrowth of 7%. Overall, there's been a volume degrowth of 6% and price degrowth of 1%. EBITDA for the quarter was rupees 154 crore against rupees 166 crore for the same period last year. Profit after tax for the quarter stood at rupees 102 crores as against rupees 98 crore for the same period last year. We are significantly pleased with the response we are getting for our cotton hybrid Diggaz, and we believe it has significant growth runway. Our focus will be primarily on 5 key crops: cotton, maize, millet, mustard, and rice. We believe the focus on such selective crops will aid in driving scale. We aim to gradually build our presence across these 5 crops with a focus on profitability. Our efforts on expanding the customer base and product portfolio are going to help build more resilient business. Our efforts continue to be directed towards driving focused execution both at the front as well as the back end. This includes portfolio optimization, territory rationalization, removing overlaps, and driving cost efficiencies and simplification across the value chain. Our action across the portfolio continues with 2 new products in crop protection segment launched during the quarter. We continue to be persistent on improving capital efficiency, both for fixed capital as well as working capital. Our inventory levels have moderated. Collections have also improved. We have a healthy cash and liquid balance of rupees 454 crore as of 30th September. We envisage spends on capex would be around rupees 50 crore. In summary, we are implementing various initiatives and we are trying towards achieving consistent, competitive, and profitable growth. That concludes our opening remarks. We can now commence the Q&A session. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Sukrit D. Patil with Eyesight Fintrade Private Limited. Please go ahead.
Good morning to the entire Rallis team. I have 2 questions, one for Mr. Gyanendra and one for Mr. Bhaskar. So to Gyanendra, Mr. Gyanendra, my question to you is, given the volatility in monsoon patterns and farmer sentiments, what are the biggest execution challenges you foresee in scaling your crop protection and seed business over the next few quarters? And how is Rallis adapting its go-to-market and product strategy to stay competitive and relevant in this shifting agri landscape? Yes, thank you.
You wanted to take one by one? Okay. So fine. Look, I think volatility in agriculture sector now, it looks like has become a norm, not only in India and across the globe. So obviously it poses challenges, but I think what we have been saying in the past is that, look, our focus on three segments, which is soil and plant health, our crop protection portfolio, and seed, will anchor our business. And because we produce these products, we research these products, we sell in India, so we'll continue to not only sell in India, we'll also continue to explore the opportunities for export. And along with comes our collaboration product access with multinational companies. So we believe the kind of pipeline we are developing and the relationships we are developing for product access as well as some of the CSM development, I think will ensure that we continue to get feed of a new product to develop combination or co-launch with multinationals in the domestic market, as well as continue to explore some export opportunities. On the top of that, I think other thing we have been saying is that, look, we are getting very focused. India is a very large country, very dispersed, but companies with focused effort in the villages are likely to more succeed. So our continued focus on identifying right villages, leveraging digital market reach. So combination of digitalization across, focus on manufacturing efficiencies, getting new product launched. I think combination of all of those things, we believe we should be able to grow better than the industry in the long term.
Okay, great. Thank you. And my final question to Mr. Bhaskar is, with raw material inflation and pricing pressures in the key markets, how is Rallis planning to protect the margins going forward, especially in balancing procurement efficiency, product mix, and pricing discipline? What are the key financial levers you are planning to maintain the profitability going ahead? Yes, sir. Thank you.
Yeah. So when you say procurement efficiencies, I think the efficiency lies directly around the procurement decision itself. So we buy at the right time. So timing of purchases is very important. So that's kind of a very calculated call, wherein we look at the input side as well as the sales side. What is our view of the price ultimately will fetch? So most of the times these are spot decisions. And that's how we have rigor control over it.
Okay, fine. Fair enough. Thank you very much. And I wish the entire Rallis team happy Diwali and best of luck for the next Q3.
Yeah, thank you so much.
Thank you.
Thank you. Next question comes from the line of Rehan Syed with Trinetra Asset Managers. Please go ahead.
Yeah, good morning and thank you for giving me the opportunity. So I have only two questions. First, on the CSM revenue side, am I audible, right?
Yeah.
Okay. So my first question is on the CSM revenue side. So the CSM revenue dip due to customer phasing. So can you help us understand whether this is purely timing related and do you expect any normal volumes to resume from quarter 3 or quarter 4 onward? This is my first question.
Yeah. So I think our current year CSM revenue, if you see, I think has come from all the products. So metribuzin has done very well. So is pendimethalin and hexaconazole. Majority of the gain which has come is actually with the combination of really expanding to the new markets and also trying to be very competitive in the marketplace. So I think our focus is really new product, new country. I mean, a product, new registrations, new customers. So that is really helping us. The other benefit which we had was many of our products actually, other than formulations, are exempted from tariff in US. As a result, we were able to continuously supply.
Okay, fair enough. And my second question is on your newly product launch of Divid and Dodrio. So, sir, the company launched 8 new products year to date, including Digood and Dodio. So, could you discuss which of these products have shown the most promising early response and how you see them going forward for upcoming years?
Yeah, so we launched product both in crop protection and seed. So the seed product which we launched, one new hybrid in cotton, one in rice, and one in maize. All three have done very well. Now it's a question of producing more and scaling up. So we are very optimistic about the performance of those products in the future. On the 8 products which we talked about, in one product we had to delay the launch because we were not happy with the quality of the formulation that came out. We have fixed that problem, so that will get introduced now because that has application across the crop. It's a broad spectrum insecticide. Of the remainder, majority of them were herbicide and one fungicide and insecticide. All I can tell you, these products were introduced towards Q4 of last year as a test launch, and we actually have more than doubled their volume as we speak on YTD basis. So looks like good traction and good momentum in the market.
Okay, fair enough. That's it from my side, and wish you happy Diwali to the whole Rallis team.
Thank you.
Thank you. Next question comes from the line of Rohit Nagaraj with B&K Securities. Please go ahead.
Thanks for the opportunity and Shubha Deepavali to entire team. So first question is on the biostimulants market. So if you could just give us an understanding about how the last 3 months have transpired in terms of the regulatory regime, and how are we placed in terms of the opportunity. More importantly, if some of those non-regulated players are weeded out, will it be a better opportunity for the incumbents like us? So a broader understanding on the industry in general and Rallis in particular will be very helpful. Thank you.
Yeah. So I think, yes, what government is trying to do probably was overdue, and that simply means that there are challenges for everybody in the short term. But from a long-term perspective, I see this as a positive development because it does, help in bringing more organized market players. Having said that, Q2 was challenging on 2 counts. Farmers do tend to miss sprays when there's so much of uncertainty in the marketplace because of the external weather conditions. So as a result, and then some of the products, for example, we were dependent on our third-party supplier. They were able to not secure the permission to sell. All of that is sorted out. So I think there was a storm in Q2, if I can use the more appropriate word, but this should lead to better prospects for organized players like us in the future.
Sure. Thanks. That's helpful. Second question is in terms of the seeds availability for next season. Given that for this quarter there was an impact generally across the board, so are we seeing that for the next Kharif season there will be some issues in terms of availability of seeds? Thank you.
So if you see from a crop perspective, 4 crops are more important for us because they constitute bulk of the revenue. One is cotton, followed by maize, rice, and bajra and mustard. So I do not see any risk to mustard because the limited players. Bajra also, I do not see any challenge at this point of time. Most of the challenges are expected in cotton, rice, and maize. Now, cotton, we already had taken sufficient planting, so I think we are covered. And maize and rice is getting planted now, right? So as we speak, when Kharif gets harvested, particularly Andhra Pradesh, Tamil Nadu, and part of Orissa, Chhattisgarh, rice gets planted and maize gets primarily produced in Andhra and Telangana. So planting season is progressing. We are working hard. Last year, the challenge was not only with the planting. I think planting happened on the time, but everything happened on so much on time in a narrow window. So when harvest came and all harvest happening at the same time, There was a constraint got created in drying capacity, and rain led to other challenges. So we are tying up the processing capacity, storage capacity. At the same time, production planning is in place. So as I speak, I don't see any risk in cotton. Rice and maize, I think we are planting, and we are taking sufficient measure based on our past experiences to ensure supplies.
So, thanks a lot and all the best, sir.
Thank you.
Thank you. Next question comes from the line of Saurabh Jain with HSBC. Please go ahead.
Thank you for the opportunity. Again, on the seeds front, there are two headwinds in the cotton side, right? One, we are noticing a consistent decline in the overall cotton acreages in the country. So structurally, does it become a problem for the seed players having a high portfolio to the cotton, products? And secondly, you also highlighted there is another rising problem of illegal ST seeds. So my question is, these two problems, do you see them as structural or at least in the midterm as a major headwinds for you? And can that actually restrict the opportunities for you to continue to grow your cotton portfolio the way it has done for the last few years?
Yeah. So our cotton dependency is very high on northern India. Excuse me. Fortunately, illegal cotton has not made inroads into that. To that extent, we are secured because I think our 70-80% of the business still comes from north. Now, south and central, yes, this year there was a setback in terms of cotton planting. Now, how this will pan out in the future, I don't know. But given the rise of illegal HTBT cotton last year, a lot will depend on how well the harvest comes. And I think I'll have to wait for really third quarter to get over, because that's the time when you start getting more clarity from the farmers whether they were able to secure enough yield from HTBT cotton, what kind of experiences they had. But if it turns out to be successful as it was this year, I think it does create the challenges for companies in the operating primarily in south and central sector, central part of India.
Okay, that is helpful. Part two, also, if we look at the margin profile, this quarter, YY basis, seeds has declined, high double digits. But still, we noticed that there has been an improvement in the margins. So, two things. One, can you explain us what could be the broad margin differences between all of these 4 or 5 products that you do? And if, the margin, can the margin improvement be attributed to your lower margin product not growing for in this quarter? Is that the reason, or are there more reasons behind it? And also, have you seen any sales returns even in your seeds portfolio as well?
So I think for the current Kharif season, we have accounted for everything. So the numbers you see are true Kharif numbers. So sales returns are accounted for, discounts are accounted for, manufacturing cost overruns, everything is accounted for. The number you see are real. But do not see this as a quarter number, see this as a half-yearly number, Kharif season number. And on a half-yearly basis, we have seen significant improvement in margin. I think in seed, what happens, if you have a portfolio which is coming primarily from your own research, then you tend to make higher margin. But not every company can research and sell everything. The good news is that in first half of the year, more than 80% of our business comes from our own research product. As a result, margins are higher. As we move into quarter 2 and quarter 4, which is more Rabi season, which is less than 20% of the revenue, that gets skewed towards basically more product coming from the partnership. That's where margin profile tends to get lower. But I think I believe past is behind us. We are very focused seed company now, doing few things. I believe that we should be able to sustain and grow margin. So our target is that we should bring our seed business to in the range of 23 to 25% EBITDA margin. First half we are very close. Second cost there could be slightly dilution because revenue will be smaller than the cost remains same. Revenue will be smaller, but I think we're on track to deliver that kind of margin, which will be on par with the industry best players.
Okay, understood. Just very last bit, can you also give us some sense in terms of the difference between margins of your cotton and maize, I presume would be more of your in-house products, and what could be the margin difference between bajra and all of these other products?
So bajra tends to be highest margin product. Cotton, maize, and rice, they would tend to fall in the same bucket. Because cotton challenges there's a government price control.
Yeah, of course, yes. Okay, understood. Thank you so much, and I'll get back into queue.
Yeah.
Thank you. Next question comes from the line of Somaya V with Avendus Spark. Please go ahead.
Thanks for the opportunity, sir. Hope I'm on. Hello.
Mr. Somaya, you are not audible. Can you come a little closer to the mic?
Yeah, your voice is not that clear.
We have lost the line of Mr. Somaya. We'll take the next. That is Abhijit Akela with Kotak Securities. Please go ahead.
Yeah, good morning and thank you so much. So on the export business, we've called out 33% growth for this quarter. Would it be possible to also just share the absolute number, the export revenue number in rupees crores? And also, if it's possible to share a export growth percentage for the entire first half of the year, that would be great.
So my understanding is our export, just give me a second. So export has grown by, I think, more than 30% in the first half. Is that right?
Yes, yeah, close to that.
Yeah. It's about 30% growth over previous H1.
Okay. So for the quarter, I think we can assume it ended up at somewhere around 190 crores. Would that be a fair number to work with?
Let me see what is the quarter number. Bhaskar, can you talk about quarter number? But
yeah. For the quarter, it's 161 crores.
Oh, I see. Because I thought last year's corresponding number was about 142, if I'm not mistaken, based on last year's disclosures. So 33% growth would have implied about 190.
So no, 33% we are talking on a 6-monthly basis, right?
Yes. So yeah, 24. So see, if you go to the absolute number, it is about 24% for the H1 point of view.
Right. Yeah, I was referring to the quarter because quarter we have said 33% growth. And last year's number, would it be is 142 still accurate, or has there been a change to that number?
No.
Yeah, H1 we have grown from about 200 crore last year to about 300 plus.
Oh, okay. Yeah, there seems to be some difference versus what we had reported last year. Maybe I can take it offline.
Yeah, you can speak.
Please hold. Maybe I can just clarify. Just give me a moment. So H1, absolute number is 312 crores. Okay.
Mm-hmm.
And this would be more like a 51% growth against last year, which was 207 at a H1 level. At a H1 level.
Yeah, 51% growth.
Yeah, from H1 level.
Okay. All right, I'll take it offline in the interest of time. And just one other topic.
The way we tell our number is basically export, B2B, and export. So you can actually take offline and get what I told you was more about export. Last year, I don't know what number you take. We were about 120, and this year 160 plus.
Yes,
that's
correct.
why I said 30% growth.
Okay. Got it. Thank you. And just the other thing with regard to the outlook for the second half of the year now. Number one, on the export side, has there been any, in your estimation, has there been any front loading, and therefore could there be some, softness because of that in the second half this year? And conversely, on the domestic business, how do you see the Rallis season now shaping up following whatever has happened in Kharif? Thank you.
Yeah. So two things can happen. I think there could be some spillover of Kharif season, 10-15% to October, because there could be extended Rabi season for some crops. The export, I don't think there's any front loading happening, because customers also, after them getting aggressive about the inventory purchase in the past, I think customers also have become very cautious. I think what we should watch out is if US raw market remains restricted, effort from Chinese player to take the product more to Brazilian market, and Brazilian market has its own limits and commodity prices are soft as a result. While volumes might go, there might be some pricing pressure.
Okay, sir. Understood. Thank you. I'll come back in the queue for that.
Yeah, and on domestic, I would say one is extended Kharif season, and normally residual moisture leads to a better Rabi crop. If this situation continues, so I'm expecting Rabi prospects look slightly better at this point of time. I know there are challenges in terms of fertilizer supply. So when fertilizer is the shortage, a lot of capital goes towards securing fertilizer first, and then pesticide companies and seed companies take a back seat. But I believe once this planting happens, fertilizer issue gets resolved, farmers would shift their focus to crop protection.
Understood. Thank you so much, and all the best.
Yeah, thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Prashant Biyani with Elara Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, this quarter branded business seems to have declined by 10%. So one would assume that margins would contract, but you rather delivered a margin expansion at gross level. So is it because of product mix change in branded business, or is it that lower sales of non-profitable products like acephate in B2B business led to this?
Yeah, so I would say, the overall decline in crop protection in Q2 you are referring, right, from a GC perspective. I would say domestic is a combination of price and, in fact, we probably would have done overall all basis. We can look at it, we might have done better on the volume, because I guess what has happened is a tendency in the market to reduce the price and offer more schemes, so that as a result retailers and distributors are able to pass on some benefit to the farmers. So a lot of promotional campaigns done. So I would say from that perspective it could be just price getting impacted more than the volume.
Okay. And sir, on seed side, you have mentioned in one of the questions that we have taken sufficient planting in cotton. So that should yield to how much of growth in seed sales, or at least seed available for sale in next Kharif?
So based on our target, we expect our Diggaz and newly launched cotton hybrid not to keep doing well, and we have planned for a significant volume expansion. But you have to understand, cotton seed production is still in the field, right? And it will all start coming now from Q3 onward to our warehouse, and it has to go through what we call quality testing. So I would say we have planned for sufficient expansion, significant expansion of our cotton business. But I cannot put a finger on volume now. Maybe towards the end of Q3, we will have more clarity on how much comes in and how much it passes the quality test.
Okay. Actually, sir, the only thing was that year before last, we had seed sales impact because of cyclones and all. And now this season, I thought that we would have ample seeds available. But now
so cotton does not get impacted by the cyclone, right? So cotton is already in the field. It gets planted in Kharif. Cyclone have impact on rice, maize, and other crops.
Okay. But we have got good products in Atish and Diggaz. In your view, what would be the optimum top line level we can take it to take full advantage of those seeds before a competitor comes in with a better variety?
I think we probably have only harnessed 50 to 60% of the potential of the product. There's still a lot of runway left.
Right. Okay, sir. Thank you so much for your time.
Yeah.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Somaya V with Avendus Spark. Please go ahead.
Yeah, thanks for the opportunity, sir. So my first question is on the exports business. So if you could give some color in terms of volume growth during the quarter, pricing, and also you did mention about venturing into newer geographies. So ballpark, how all these three kind of contribute to the overall growth?
So on a half-yearly basis, if you see, I think bulk of the gains have come from 85-90% have come from volume and some from efficiencies and price.
Yeah. So when I say, so when it comes to volumes in the existing geographies, this growth is more or less from existing geographies. Just wanted to understand the newer geographies that we are getting into. How much would have been the support?
No, yes. So for the current product, I would say bulk of our business still comes from existing geographies, but we have been able to add new customers in the same geographies. There is some growth in newer geographies, but I think those are early supplies. We have to build on those businesses. So I would say bulk of it is existing geography, more customers.
Got it, sir. So also when it comes to the tariff impact, any ballpark in terms of our total exports, what would be the quantum that will be exposed to these higher tariffs? And how is it getting approached in terms of, are we able to take commensurate price hikes or we have to absorb it? How is it getting?
As I said, the majority of the gain actually have come from volume, right? A small percentage has come from price. We are in a very competitive market. On a continuous basis, we are competing with basically Chinese players and domestic players. Our US, Brazil, China, Bangladesh, these are our primary markets. But we have added some countries like France, Malaysia, Spain also to our portfolio this year. But countries, yeah.
I was just trying to understand on the tariff impact for us, our set of products. I mean, in our overall export basket.
As I said, US is our primary business, right? Now, US has tariff challenges, but fortunately for us, 85% of our business is technical supply that is not impacted by tariffs as of now. It is only 15% of export business is impacted by tariff because it is formulation based. Right? So I think to that extent we are secured.
Got it, sir.
But it has a second order effect on Brazil because when people are not able to supply to US, they tend to go to the second largest market, which is Brazil.
Got it, sir. So also in the domestic market, in the quarter, in terms of the extent of volume versus pricing, was there any negative pricing impact also? Generally, how is the pricing trend for the industry, especially with this prolonged rainfall impacting few of the pockets? And also in terms of sales return, is this something that's done with this quarter, or is this something that can extend into next quarter as well?
So I think we do have a fairly robust process of what we call building bottom up stock taking from distributors in terms of in turn take the feedback from retailers. So I think we have sufficient provision and taken returns. What we have not taken return is for the residual part of the Kharif. So I would say by and large covered, unless something untoward we experience.
Sure. So the other question was on the domestic pricing versus volume impact during the quarter, sir.
So pricing, as I said earlier, pricing has been challenging because when there's enough supply in the market, what every company in the industry does, and we also have to do to be online with the market situation, is you tend to float more schemes to collect money. You tend to float more schemes to push the product to the retailer level price. And that also, when it gets passed on to the farmers are also encouraged to use the product. So I guess depends on the product, but by and large, I would say pricing probably will remain subdued for the sector. If somebody has got a specialty product, a unique product, that might be a special situation.
So we had a 10-odd% decline YOY in the domestic this quarter. Would it be like low single-digit kind of a pricing impact is something that is there in that number? Is that the right way to think about it?
Yeah, bulk of it is pricing. There's some volume as well.
Got it, sir. One last question, sir, on the soil and plant health portfolio. What would be a quantum within our overall domestic portfolio, the share of this part of the business?
So on an annual basis, last year we did about 225 crore. This year, on a half-yearly basis, we are flat. We were planning for actually 20% growth, so we are flat in terms of revenue. But the majority of the impact has come from rains. So the biofertilizer business we have actually also has, when there are too much of challenges, because the process to make biofertilizer is also called open field system. So when too much of rain, it becomes difficult to process too much biofertilizer. The other is biostimulant area, which got impacted, and that's a prime. So on the growth side, supply side, on the growth product where regulations were not challenging, because of excess rain, supply of the raw material became a challenge. On the biostimulant, it was primarily change in government regulation, but I think most of the issues are sorted for us, and we expect recovery of the normal business from here on.
Thank you, sir. And also, in terms of margin profile, if you were to put the three segments, the crop care, seeds, and bio probably will be higher in terms of margin profile. So bio followed by seeds followed by crop care would be right taking.
So we have to take that. I think soil and plant health obviously contributes higher margin, GC margin, followed by seed. You're right. And even on CSM, though it's a small business, margins are higher. Where we have margin challenges are really export business, where it's a very competitive. Even our domestic institutional business, so part of the product we sell also sell it to domestic suppliers, domestic companies. That's where most of the challenges are. But our domestic B2C business actually, on an overall basis, because of the better cost management and all, and better SG&A management, has shown marginal improvement from a GC perspective.
Thank you, sir. It's quite helpful.
Thank you. Next question comes from the line of Pawan Kaware with Nayan M. Vala Securities. Please go ahead.
Hi, thank you for the opportunity. I'm audible?
Yeah.
So my question was on CSM part. So last year, what were the CSM numbers in our export, and this year, this half year basis? What was the growth in the CSM business?
So actually, CSM business, if you see on a H1 basis, actually has shown some degrowth, but I believe a lot of it is also related to timing of the customer. So one of our key products, which goes in making aeroplanes and all, with Boeing facing challenges, I think, there's some rescheduling of order. CSM customer, I think it's more of a timing issue than anything else.
Okay, and our
But
CSM, yeah, you can go.
Yeah, but our CSM margins continue to remain intact.
Okay, and our CSM business is mostly focused on the export, or do we providing at domestic level also?
So it's combination, primarily export, but we do have actually in fact, one or two customers we have added to our CSM portfolio domestically.
Okay, and out of the number of 312 crores in the H1, what was the contribution from CSM?
CSM, I said this H1 was relatively small. In fact, majority of the business has come from export of technicals and domestic institutional business. CSM is relatively small this time.
Any absolute or percentage number?
Actually, less than 5%.
Okay, thank you. Happy Diwali to all.
Thank you.
Thank you. Next question comes from the line of Saket with Kapoor and Company. Please go ahead.
Yeah, namaskar, sir.
Yeah.
I'm audible.
Namaskar.
Yeah, sir, firstly, pertaining to the sales return, what have you factored in for the first half, and how should this be penciling in for the remaining part? I think you did allude to it. And secondly, sir, with the vagaries in the rains and that affecting the crop protection business, how should the current ensuing quarter look? Generally, this is a weak quarter, seasonally weak quarter for us and the industry. So if you could just give some color on the aspect.
So generally, when there are late rains and a lot of residual moisture, we call it primarily Rabi season. Other than chili crop, which anyway was planted less, looks better compared to previous years. As far as returns are concerned, I think we have methodology and we have created sufficient return reserve provisioning. Hopefully, we should not get into significant negative or positive surprises both ways.
So, sir, seasonally, and if we compare it on the last year basis, these were not the factors for Q2. So, taking into account Q3 should, on a prospect basis with the moisture in the system, in the soil, should be comparatively better in terms of the offtake also for as you said, that the groundwork for Rabi begins early. That should be a fair understanding.
Yeah, so absolutely, and planting should be good. I think right now there is scrambling for fertilizer and all. I think once that settles, then there's a consumption of herbicide in primarily southern India, rice as well as maize in south and eastern part of the country, and wheat in northern part of the country. Then vegetable insecticide and fungicide season should kick in. Minus chili. Chili has been a bit of a disappointing because of the low commodity prices. But overall, we are positive about Q3 and Q4.
Because if you could just give your take on the shortage of fertilizer and the real aspect of how that has affected the agriculture industry as a whole, because when we hear and we read about the yield part, in all cases, everywhere the acreages have gone up, and at least the newspapers are pointing towards higher yields. So correct me there. So what has exactly played out for the shortage of fertilizer, and what corrective steps are there in the annual that will correct the situation going ahead and thereby reviving?
So let's split the business into Kharif and Rabi. So I think in Kharif, though overall area went up, but based on what I'm hearing, an estimate, while area has gone up, overall production may not go up because a lot of it got damaged because of weather condition and various other things. So when area goes up, obviously fertilizer also goes up. As far as Rabi demand is slightly higher right now because there's an anticipation of area increase, and that's why prices are up. But this does not always mean higher area. So production overall might go up, but productivity and production are two different things. I think this year what you will see is a Kharif season productivity drop, right? Now Rabi is a relatively more secured season because rains are more certain or they're not as vigorous. So these are not related eventually fertilizer shortage to increase our production or decrease in production. So there's a challenge at the time of planting, but as the season progresses, we'll also see situation eases a little bit.
Sir, just to get on the fertilizer shortage part, so what is the take of the industries on the sectors? Is it only the subsidy part and the RM prices varies, or what has led exactly to fertilizer shortage, which we have not heard for a very long time, and if your take on the same, sir?
So I actually do not get into details of why shortage is there. Obviously, India for phosphorus and potash has to import and sell, so there could be challenges on those fronts. Or urea capacity also has peaked, so there might be import requirement, and there could be challenges related to that. But when there's a shortage of fertilizer, a lot of market money which should come to pesticide and seed companies tends to go to fertilizer players first, and that puts challenges on the receivables of the pesticide and seed companies. So, in fact, when there's too much of fertilizer noise, it's bad news for pesticide sector from a receivable perspective and your ability to place the product, because you want some money before you place the product, but these shortages create some kind of imbalance in terms of movement of the money to different components of the business.
Right, sir. And lastly, sir, on the R&D part, what are the key highlights for the first half in the R&D, and what are we anticipating? What should we expect going ahead in the R&D in terms of any of the molecules getting patented off and we developing the same, and what's the take for the R&D?
Yeah, so I think one of the things we did, and I talked about in previous calls, is that we have got R&D very focused now. A lot of things we were doing, we have stopped, right? For example, we don't do any vegetable R&D now. We are less focusing on GM crops now. We are focusing more on modern breeding tools, which are biotechnology driven, but are not GM crops. So that, in fact, the progress you are seeing in the seed side is a lot of it is driven from focus. Same applies to crop protection side of the R&D. And I think as things unfold, I think towards the end of this year or early next year, we would be able to probably give a more comprehensive summary of the progress we have made. But I'm very pleased with the 9(3) registrations we are securing. We should be launching a wheat herbicide, a rice herbicide next year, which will be completely 9(3).
And
so making good progress.
Okay, sir. Can you quantify, sir, how much have we spent on the R&D, and what is anticipated? What can we envisage for the remaining part of the year?
So I don't have exact number, Bhaskar, you can give, but our R&D budget ranges from 60 to 70 crore per year. And I think what we're trying to do, not trying to cut on R&D, but trying to get it more focused. Do you have separate cuts for R&D, Bhaskar?
Yes, it's about 60-70 crore.
Yeah.
Thank you, sir. All the best, and should be public to the entire team.
Thank you. Same to you.
Thank you. Next question comes on the line of Riju Dalai with Antique Stock Broking. Please go ahead.
Hi, sir. Thanks for the opportunity. Hope I'm audible.
Yeah.
So in H1 we have like in this 2Q we have registered roughly 10% of decline in our overall growth in domestic business. So, as per your understanding, how was the industry growth for this quarter or maybe for the H1?
So it's too early to comment because a lot of numbers, are yet to come. But based on what I hear, that industry is not likely to grow beyond low to mid-single digit.
Understood. Because when we are talking to some of the channel partners, so we understood that there was some decline in the volumes across key regions, maybe Maharashtra and the other parts of the maybe Punjab. So there was a decline in terms of volume for 10 to 15%. So is that a correct understanding?
Yeah, right. So not across the Punjab, certain pockets in Punjab.
Okay. So can you say that the industry for H1 could be around -5 to +5% kind of a growth trajectory?
So companies could be in that range, right? I think industries would grow low to mid-single digit in my view.
Understood, sir. And also yeah.
And the companies with the seed in the portfolio, they get some cushion because seed business has done overall well.
Got it, sir. And in terms of excessive rainfall and rainfall till the first week of October or maybe late September, so how do you see the Rabi season and the field preparation will happen and the Rabi season will be good? So you have commented that the excessive rainfall always follows by a good Rabi season. But field preparation and the early sowing for the Rabi, how that will happen in where we have seen a crop damage or field damage, maybe eastern part of the Maharashtra or maybe Rajasthan, Punjab, these parts. So how do you see that scenario?
So look, so farmers are very optimistic people, right? Even if they have a bad kharif, they'll still go ahead and have a Rabi because this residual moisture only factors in central and southern part of India and western part of India. Because east and north anyway has a lot of groundwater, so it doesn't impact them. My personal view is that larger planting of pulses and some more rice in south and eastern part of the country should help in basically higher Rabi planting and higher input usage. And I think probably by mid of November we'll have more clarity because that's when majority of the crops get planted. Normal thumb rule would say late rains they contribute positively to the Rabi prospects.
Understood, sir. Understood. And as you mentioned that we are in this Kharif season, so there was a extended Kharif season maybe till October. So was there any kind of pest attack in between this period, maybe last 1 month period?
So this year disease has been more prevalent than insects. A lot of insects actually got washed away by heavy rains also, right? And so I think the crops which are left for a spraying are mainly southern rice, which gets planted late, and some cotton in south. As far as north is concerned, everything is over. Soybean is over, north cotton is over, rice is over, millets are over. So north and the east primarily is down.
Thank you. Mr. Dali, please rejoin the queue for more questions. Next question comes from the line of Viraj Gay with SEC Investment Management. Please go ahead.
Yeah, thanks for the opportunity. Just two questions. One is on the plant nutrition, the resolution. Sorry, I missed that. Is there any resolution to that? Do we see impact continuing for Q3 and the rest of the year, or how should one understand this?
So for our business, I think we are sorted now, right? We had a challenge with one or two products, but we have found a solution to those with the help of partners. So I believe from here on, business to normalized.
Okay. And for the industry, because there's a lot of registration required and maybe weeding out, unorganized players. So just trying to understand in terms of the share of those unorganized or, not so players not adhering to quality standards. What would be the share, or if I have to look at the overall pie of the market?
So I exactly don't know volume and revenue share of our unorganized people, but there are too many players, right? So I think number of players would certainly reduce. And I believe in this development of trying to regulate market better. It brings more clarity for organized company like ours. So I see this segment. We continue to look at very positively from here on.
The second question is on the export piece. I think what you said is technical export is more viable and competitive, especially to US with formulation. Can you explain, how does the price and cost dynamics compare if someone's formulating in US versus someone, say, formulating from China or India and exporting?
So I think the value addition part, cost probably China would always be more efficient because of their cost of capital, there is scale and all. But at the same time, we should not forget that there's an increasing demand from companies operating in those markets to look at alternate source. Given the geopolitical situation, I think all companies at the same time would look for diversifying their supplier basket. So I think while one thing is negative, but we also have to see the positive side. So the positive side is, I think, while it may not have benefited in short term, but I think from a long-term perspective, suppliers looking for alternate sources like India, and I think it still augurs well for the business.
No, I understand the diversification piece, but I was just trying to understand, is it still viable or competitive for anyone formulating in US and, say, sourcing the AI from India or China? Or it's still economical, even post-tariff, for someone to do, import of formulations from India or China?
But there's no straight answer. For example, if you go in the southern hemisphere, there is some formulation capabilities beyond US in Colombia, Brazil, some in Mexico. So depending on the source registration, some companies can take the technical to their facility in Mexico, and if Mexico is exempted, they can still sell very competitively to US. So it depends on the product and registration status. There's no general answer.
Last question, if I can squeeze. See, in US, because of again of this tariff and trade war, what do you see, for certain large product segments like, say, soybean or maybe corn, there's an increasing pressure on commercial farmers in those regions, right? Are you seeing incrementally any softening in the demand, from those pockets or regions?
So I think given that channel inventory is normalized, I do not see pressure in the demand. I only see pressure on prices.
Thank you very much, and good luck.
Thank you.
Thank you. Ladies and gentlemen, we take that as the last question and conclude the question and answer session. On behalf of Rallis India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Yeah, thank you everybody for joining, and happy Diwali and festive greetings to everyone.